Part 5, final video. Let's get into this. Before diving into a fixed index annuity, let's take a moment to think it through with your advisor. What's your retirement vision? How do guaranteed income and principal protection fit into that? Make sure to ask about participation rates, caps, spreads, and liquidity provisions in the contract. Get a clear, written breakdown of all fees, administrative, rider, and surrender charges. Is your advisor recommending a specific product or comparing options? Don't forget to look at alternatives like bonds, CDs, or variable annuities for a broader perspective. Check the financial strength of the insurance company with ratings from AM Best or Moody's. Ask about their claims-paying history and any past regulatory issues. This matters for your security. Dive into the contract details. How are index credits calculated? What's the minimum guaranteed return? Are there adjustable caps or participation rates that could change? Understand the impact of surrender periods and any waivers for emergencies. If your situation changes, does the contract offer enough flexibility? Match your income needs and risk tolerance with the annuity's features. Discuss all the what-if scenarios before you sign anything. FIAs are regulated by state departments of insurance, ensuring consumer protections. The shift to fiduciary standards means agents must document why an FIA is right for you. FIAs are growing rapidly, driven by an aging population and demand for guaranteed income. Expect more customization in products, like tailored riders and digital access. Legislation is evolving to enhance consumer education and transparency in the market. In summary, buying an FIA requires thorough research and a trusted advisor. When done right, FIAs can provide secure, flexible retirement income. For more information, reach out to Kris Keush.